Well, RBA Governor Philip Lowe's back in Canberra today, folks, for a 3-hour grilling from members of the House of Representatives. This time, though, there is also an increase in unemployment in January to consider. Our business editor, Ross Greenwood, is here to explain. Ross, good morning. Did that unemployment rate, 3.7%, change the outlook at all for interest rates?
Well, maybe just a little, but only a little, because the reality is that interest rates are going to continue to go up while inflation is high in Australia. And even if you look at the United States right now, which is more advanced, I'd guess, in this economic cycle in Australia, is there's still pressures there. And even overnight, you've seen the Dow Jones index down another 1.25% as Federal Reserve executives basically again spelling out that there are more rate rises to come. Now, yesterday, I can give you a little glimpse as to what the markets did. This is basically ASX, which does measure the likelihood of another 0.25% rate rise the next time the Reserve Bank meets. You can see here there's only a 30% chance, they say, of no chance whatsoever. It's now 70% as of last night that rates will rise by 0.25% at the next meeting. You can see previously, before that unemployment rate came out, it was at 75%, so it did just ease off a little as a result of that higher than expected 3.7% unemployment rate. But do be aware, in January, there's some anomalies with employment. Number one, a lot of people go on holidays. Number two, what happens, a lot of people are changing jobs. And so it could very well be that that unemployment rate of 3.7% actually masks a little bit more employment that might be otherwise out there, because the underemployment rate, it's pretty much steady. And the second thing is also that the participation rate was down. That generally would spell a reduction in the unemployment rate as well.
OK, so apart from the employment situation, Ross, after an hour and a half before the Senate Economics Committee the other day, is there anything he wasn't asked?
There's plenty he wasn't asked, Pete. There's absolutely plenty. The other day, there was much concentration on, well, families are hurting because you've raised interest rates. Why are you raising interest rates? That wasn't the question. The question is, why didn't you raise interest rates sooner and faster to make certain you try to change the behaviour of Australians and their consumption and spending? If the reality is true now, the Reserve Bank did not, as late as November in 2021, believe in the inflation story. And what really I'd suggest that Philip Lowe needs to be asked today is, why didn't you go harder on interest rates to change behaviour sooner? And also, why did you take the foot off the brake when it came to interest rates in November last year, when interest rates were suddenly eased back to 0.25% rather than the 0.5% cuts previously? They would be interesting questions to ask, because you'd be fascinated by the response you might get from the Reserve Bank Governor.
Yeah, sure would. And buy now, pay later, Ross, companies like Afterpay and Zip created a mini stock market boom, but also a boom in users. Now there are big moves to regulate the whole industry.
It really is. This is really fascinating, because the whole question for a long time has been the trouble some people get into with buy now, pay later contracts. The second thing is, remember that they are unregulated. So they're not a part of the Credit Act. You don't need to know that a person can repay that debt or afford those goods when they use buy now, pay later. Well, ASIC and a number of others have now come together to make submissions, and ASIC in particular, the corporate regulator, is seeking the toughest of all. This is ASIC, and what it says: uniform regulation under the National Credit Act would bring a more consistent regulatory framework across all buy now, pay later providers, and a standardised regime that could be enforced by ASIC. Now, the whole thing is in Australia right now, 7 million users, $8 billion worth of transactions per year. The reality is some people cannot afford those, and especially as interest rates are rising. And so this is the reason why more regulation is needed, which of course, no doubt, is being resisted by those companies themselves.
OK, and just a final one here, quick one here, Ross. Tesla in America. It's been asked to recall, 360,000 vehicles, not a small number, because of issues with its self-driving tests.
So precisely. Now, this is interesting here because there's differences between the US and Australia when it comes to self-driving cars. In the United States at the moment, there's beta testing for Teslas and its so-called autopilot. Now, it's interesting because these products have now been recalled because it's suggested in some cases, you can see it here, might allow the vehicle to act unsafe around intersections, respond insufficiently to changes in speed limits, or not adequately account for the driver's adjustment of the vehicle speed to exceed speed limits. Now, all of those those things you could see, would be important. Here in Australia, this is the National Transport Commission. Australia's laws don't currently support the deployment of automatic vehicles. So this is something that ultimately is going to be a big test for insurers, certainly for regulators, and indeed for the car manufacturers themselves. For if something goes wrong, who pays? That is still the most serious question that both the person driving and also your insurance company is going to have to work out.
OK, Ross Greenwood, thank you.